day, all. Ira Epstein of Linn Associates with your agriculture wrap-up for this Tuesday, and we're now at the 14th of January, 2020, and we're about 4:35 in the afternoon. Now, a lot of details about details that we're not going to get are starting to come out. Example, there seems to be a side agreement that will not be in the signed agreement between the U.S. and China tomorrow. And in that agreement, and it did take the stock market part of it down in the NASDAQ, you broke in the Dow, you came back by the end of the day, but it sounds as though there'll be a certain rollback of tariffs that we've heard about, but no further. They're going to go 10 months, in other words, to the presidential election, and then they'll decide, is China meeting its obligations? Do we raise tariffs, or do those levels of tariffs come off? So not quite what you thought. Then concerning the grain purchases, it's what I wrote in my newsletter. They're not going to tell you the quantities. They're going to agree to a certain dollar amount, and that leaves you holding the bag. Just exactly what is this deal about? That's a question. And the market took it in stride today with the wheat market still very strong. We're hearing from cash merchants that there's still good demand on wheat. A lot of wheat was sold to Mexico that we're hearing too. Soybeans were flat. This 940 area has proven to be a problem. And the oil meal spread did a little bit of a reversal today with the oil getting down to guess what number? The lower Bollinger Band, and that's where the short covering came in. You'll see that in a minute. Cotton market down a little bit right in front of the signing of this deal. I think cotton didn't like the fact that there's not going to be quantities mentioned from what we're hearing on Reuters now. The sugar, the cocoa, the coffee, still up and away. They're not backing off. And energies, they're acting to me in the crude as though the worst of the scenario for this moment might have run its course. So let's go to the charts. When you look at the weekly area of closes, I'm going to still say it. This 940 area, right here, 935 to the 940, still loaded with a resistance zone. Certainly be nice to reverse that and get a close through it, but you haven't. And if the market wants to set on a correction, this 914 area, the 18-week moving average of closes still comes into play. Now, when you look at this action through here, some chartists, not me, but some could say a shoulder, a head, a shoulder, break through this 935, and this market might be extending the downside. You've always got to pay attention to what others might be thinking. You may not be one of these people that believes in these chart patterns. I use more data than just chart patterns by far. But I know people that's all they swear by, so it's whatever the market wants to do. With the action today, the chart action in beans turned bearish. Why? You've now got a pattern of lower highs. You've had the lower lows. So to negate that pattern, all you need to do is get over 949.5 in the March beans, and that would negate it, assuming you don't first take out 935.5. It's that simple. Where's the resistance in the market? The 18-day moving average of closes, what I call that line in the sand. So going home, what happened is the bears regained control. They've got the lower highs, the lower lows, and as I measure bias, and bias, it's really simple. If you're over the 18-day average, I have upside bias. Under it, downside bias. It acts as a filter on the swing line. In terms of Bollinger Bands, you've not been able to get to a Bollinger Band high. To get to a Bollinger Band low, the market needs to get to 934.25, and between there and 927.25, the 100-day average, I would think you'd see some shorts stepping and taking some of their positions off. So going home, if you look at momentum, this market's in the bear camp. Momentum down, bias down, swing line down. If you look at the meal market, the 100-day average has repeatedly offered the resistance in the market. The Bollinger Band was hit once, but on a repeated visit to that 100-day average, this market keeps failing against that number. Are we in a trend? Not per se. You've got the lower low right here to that number, the higher high. The market today closed under the 18-day average, so the bias is down, but I don't see a swing line trend. When I come to soybean oil, let's go to yesterday. This is so interesting and so classic. The market, lower highs, lower lows, in a downtrend and very oversold. I'm sure I would have said that yesterday. If it extends the break wherever that lower Bollinger Band comes in, I'm expecting the pros to step in there. The low today, 33.51. Bollinger Band bottom, 33.56. Settlement, 34.07. So no, that doesn't turn me bullish, but yes, I think the pros got out of their short position in front of whatever tomorrow's going to hold. In the corn market, you're neutral. You're just winding up in these tight black dashed lines, which are called Bollinger Bands. A Bollinger Band is an algorithm designed to keep the market trading within it 95% of the time. The more it narrows, almost the more impossible it is to stay in that band. And the reason is eventually price forces are going to lift the market up or down. But until those forces come into play, the way the math works on the Bollinger Band, the algorithm is bringing those numbers in, and it's like putting a spring in a pipe and you keep winding it up. It will burst out one way or the other. There's no edge in the market right here is what I'm saying. I can't tell if the market's more bullish or bearish. Wheat is bullish. It still has the higher lows, higher highs. And you know what I'm going to tell you. You're up at a number, these upper Bollinger Bands, that algorithm that keeps retaining further gains in the market. That doesn't mean it can't go higher. The odds aren't in favor of it because you're overbought. Is there anything bearish? No, that's the only thing that's the negative on the chart, but it's a big other thing that's on the chart. In the sugar, 3 days in a row over the upper Bollinger Band. Now let me teach you my rule of thumb again. 5% of the time a market will close over or under a Bollinger Band. I use as a rule of thumb, it is no more than that each consecutive close takes away one of those percentage points out of the 5. So coming in for tomorrow, I give the market a 98% chance of being under the Bollinger Band. Is that bearish? No, that's not how you look at it. I would have thought the pros took themselves again out of some of the positions right here. It's extended. It means that coming back under it is where the pros might look at the market. But given how overbought you are on an extended run, no, a guy like me, you walk away. You can't catch every trade. It's impossible. By the way, sugar's not like coffee. You're not embedded. Coffee's got that embedded reading where the slow stochastics, both numbers that make it up, went under 80 and they stayed there. It's locked in. I use the word embedded, but I could have said locked in slow stochastic. It's embedded. And until it loses that, the market rides the Bollinger Band. Not all the time, but very often. What's the next downside target if it stays like this? The 100-day average of closes. That's where I would think that those that keep holding on might be looking at another zone for support. Very hard to sell a market on this prolonged break from 134.65 down to 113.70. I don't even know what a reaction would look like. This market, you've just pulled on that rubber band all the way down, and when you let it go, who knows what happens. In the cocoa market, up to the upper Bollinger Band. Now, each time we've gotten there, we have not held. The market did it back here. You can see it has problems at that, and that's what I teach to expect. You also are just in an overbought market, not where you've embedded yet. So I think the pros are taking some money off the table. Does that mean it can't do what sugar's doing and run? It's not what I'm saying. In the cotton market, you're backing off, but as long as you have this embedded reading, until that red number is under 80, I expect that on breaks a little deeper than this, you're going to see buyers still show up, lose that embedded reading, get that red line under 80. I think the buyers disappear on you suddenly, and that could lead price to the 18-day average. Right now, that's not the case. Still bullish, looking for more upside. Cattle market. This is another one of these long-term sideways markets. Look at how long it's been doing this. This is going to be a big move when it happens. I don't know which way it's going to come from. I may do a special report when it comes out. Saying that, by the way, I did put out a special report on gasoline for those of you that go to our website, and under the research area, you'll see the special report on gasoline. That came out today. But if you look at this market, just winding and winding. Now, where you take out some of these bulls because you're overbought is if you get under 127.12. Then you've, again, take away that higher low, higher high pattern. So far, you're just winding it up. I give the bulls control going home. And in the feeder cattle, that's not the case. You've got a lower low and a higher high. And momentum is correcting. Difficult market. In the hog market, the first signal in a long time that this break from the 70, let's call it the 7,900 zone, all the way to 72, 73, and this bounce negated this downtrend. Back to a neutral picture as I see it. Oversold. I'll stick with what I teach. You hit those Bollinger Bands, you're in an area without an embedded reading that the market can spin on you at any time, and that's where I think we're at. I want to remind you, we put out, especially if you're an ag trader, a tremendous amount of information on agriculture products. What are they about? Well, it's all of them. I don't know how to say it any different. Throughout the day, if you have any of our trade platforms, you'll know that we talk about who's buying what, where they're doing it, what are the option strategies at work, what are the hedgers doing in the market, what are the speculators doing, and we cover a whole array of markets. So if you haven't seen what we do, you might want to get away from a firm that occasionally writes about commodities and the one that spends a whole day doing it, both written and oral broadcasts. And of course, you know that I do a heck of a lot of videos and they're right there for you. So how do you get our information? Go to our website, sign up for a free offer if you'd like, www.iraepstein.com, or call my staff, 866-973-2077. You can also click right up here. It'll take you there. In the meantime, I'm Ira. You have a good day, and I'll see you all tomorrow.